Just as predicted. Yes, indeed. That is what we should call the title of this video. Yes, we are expecting a rejection here at the top side. We did say, hey, look, perhaps we get a push up to this wick, but very, very likely after taking out all this liquidity, what's the most likely thing to do in a falling channel? Well, perhaps we're going to make some type of a high at the top of the channel here. And then where's the downside target? Well, if we use our simple Fibonacci retracement tool, we did say, look, very likely we're going to come down to this box, and we'll call it the box of peace and prosperity and death and despair. And really, this is the line I'd like to see hold. Honestly, I would love to see us get picked up here right at the 382, but it does look like for the moment we are in a downside position. Triple bearish divergence, 2 red dots follow through the VWAP. The yellow thing is pointing down. And you've got, just a slew of higher highs in price, yet a slew of lower highs in RSI, confirming that as hidden bearish divergence, which could bring us all the way back to the bottom side of the range. Is it going to do a straight shot down? No, I don't think so. That would be a 4% move to the downside. If we just hit the bottom side of the range, if we come for this liquidity, and in fact, come for this low, why not? Looking at this as a massive range from the value area high to the value area low, as you are putting in those drives of bearish divergence. In fact, we should look going back from this high right here. In fact, we should look going back from that high right there. I'm just going to delete this for the short term and say we've got higher high, 1, 2, 3. 3 drives gets you a shot to the 1618 fib. Where is that 1618 fib? Or no, that's 4 drives to the 1618. And to be fair, you could call it 4. 1, 2, 3, 4, 5. This, to the bearish divergence hidden bearish divergence, gosh, it must sound, if you don't know what bearish divergence is, you can head over to bitcoinadvisors.com. Head over to bitcoinadvisors.com, one of our favorite websites where your connection is not private. That's okay. Attackers might be trying to steal. Okay, maybe we'll save that for another day. But there's a bearish divergence cheat sheet. All you got to do is click on the resource center at the top of the page, and that'll give you your technical targets for that bearish divergence and what's lining up here at the center of the range. Obviously, it's not going to be straight down. It's going to take some time. You can see this 4% move or 9% move to the downside did take, and I do think we're getting ready for a bounce right now. In fact, this is a daily time frame, so we're talking about a week of price action. I've got to go in about 5 minutes, so this will be a bit of a shorter video today, but I would say this: 15 days or 2 weeks to get to the bottom. How about this? From the high to the low, another 12 days. And 12 days. And I wonder if we got any bear or bull moons. We just had a big monthly closure. Probably getting a backfill right now. In fact, 9% of the downside over how many days? 15 days. Would be interesting. That would be very, very interesting. Just something to keep in the background. Personally, what I do think is going to happen is we are going to get picked up. And we're going to make a higher low because this is technically a higher high. And we're going to reverse that daily trend, and we're going to go on to new all-time highs. Why? Well, the stock market made a new all-time high yesterday for the first time in a very, very long time. So all those people that have been naysaying Mr. Trump and his tariffs, well, the stock market is making new all-time highs. I would say that is relatively good for the economy. In the broader thing, Powell spoke and said, yes, indeed, he does believe that inflation is going down. And as inflation goes down, well, there's more and more chance of the Fed doing a rate cut, which would lead us into peace and prosperity. And another thing that I had up here was our market psychology cheat sheet, which that's another thing on the Resource Center, which I don't know if I have it up at the moment, but why don't we just Google it really quick and just, again, market psychology cheat sheet. It does hold weight across the board, across all different markets. You can use this Wall Street cheat sheet, if I can get it to pull up here, to see where we are at. Well, did I draw that? We're either in hope, optimism, belief, thrill, or euphoria. It feels like a complacency bounce to me, but I actually don't think that we're there. I think we're more in this zone right here. You know, remember, on the larger scale of things, Bitcoin just had its halving cycle back here. And wow, this is an old chart. This is an old, I wonder where this, anyways, needless to say. What this represents here is the Bitcoin halvings, and 12 months before the halving is typically when the bull market starts. And every time you have this halving, right, you get a bit of a consolidation, which this was 158 days. I just have that from memory here, 158 days. And typically what happens is once you break the range, right, you get the parabolic move up. You can see on this last beautiful halving, we had the consolidation, and consolidation, broke out, retested. Here's the breakout, here's the retest, and bang, all the way up, right? You can see this, you know, this last 2016 halving, consolidation, breakout. I think, you know, to be fair, I think that it's better to look on a weekly time frame. Puts things in a bigger chart, but needless to say, you get that consolidation period, you break the range, you retest it, and here's what I mean by a break of the range. So if we take this box and we say, okay, that's the wrong tool. If we take this box of peace and prosperity and death and despair, and we go like this, and we say, okay, range broke out, retested, bang, move up. Same thing happening right here, getting that out of the way. If we have our range, we broke out, got a real quick retest. You know, to be fair, I would say it's better drawn like that. Once the halving happened, we broke out. There wasn't much of a retest here. Wasn't much of a retest. We just broke out and went onwards and upwards for a how much percent gain? That was 7,000%. This was from the low to the high, 3,600%. Not bad if you ask me. And this range breakout, which would have been from right here to here, 600%. So as you can see, the gains are getting less and less, right? So if we say that, you know, the law of diminishing returns shall hold true, well, in fact, if the last parabolic run was 600%, let's say we only get half of that, 300%. Where does that take us? That does take us right up to 250,000. That's 292%. There's our green target, which is coming right in that zone. That's after this consolidation, a breakout, a informal back test. You know, not to say we can't come back down there and test it again. You know, that would be just a wonderful test back there. I actually don't think that would be very healthy for the market. I don't know how I'd feel about things back around 74,000 in terms of a longer term bull market. Remember, the average bull market is going to last about 130 weeks, which puts us somewhere around October of 2025, you know, give or take a month or two. That's when we expect those parabolic blow-off tops to happen. And, you know, everybody says it's different now. It's different now. There's your parabolic blow-off top target coming in 4236. So, you know, keeping us in the back of our mind's eye, as they say. That sounds like such a silly term, but it makes sense. You do have that eye right in the back of your head. Just kidding. I don't know where that comes from. But that's what I wanted to bring up in terms of the halving cycle. Now, getting back to our falling channel, and again, the weekly time frame did just close. The monthly time frame did just close. And here's where the backfill comes in. Actually, right there, I'm going to mark it off. That would be a bit of a monthly level. And, you know, oftentimes when you get these big wicks like this, right, you come and fill 50% of the wick, and that's probably going to line up with one of those retracements, right? One of those Fibonacci targets. Let's see, the 50% retracement right in the middle of our box of peace and prosperity and death and despair, right? So getting some good areas lined up. And look, shorter term time frame, this is actually right where you would expect a good old bounce-ola. This is right where you'd expect it to happen. And what am I talking about here? Well, let's put it on a 30-minute time frame. 30-minute time frame, if you look from the high to the low, we're right at the 786 fib right now, putting in a bit of a hammer as we're coming into the close of the day. Remember, the futures market is going to close in about an hour and a half. And can we get the RSI to stretch down just a little bit more, print one more green dot on the hourly time frame? Look, this is trying to get picked up. It's going to get picked up. We are probably going to bounce in the short term. And, you know, my feeling is we're gonna get some sell pressure back up here. So even if we do a rally back all the way up to here, I do imagine that move's gonna get faded. They're not gonna make it easy for us. They're not gonna make this thing easy. They're gonna make it very, very... A lot of people are getting chopped up out there in the markets, but that's okay. That's what we use our TA for. So the golden pocket on the short-term time frame is right here. If we do begin to lose this level, more methodically spoken of, 104,500, or more specifically, a 4-hour closure below this median, wherever that does come in, that would be good enough to do it for me. And I'd say we are going to come down to our box of peace and prosperity and death and despair and look at a bounce from there. And if that bounce fails, right, so if we come down and we do something like this and we make an attempt there and another lower high, then I could see us coming all the way back down to this good old bottom side of the channel. Anyways, that's my 2 cents there. I do think shorter term we put in a bit of a bounce. We do put in a bit of a bounce, and I do want to check in on the 2-day volatility, and then I gotta go. I gotta get going here. The 2-day, putting in yet again another lower high on the 2-day time frame. So 2-day. We got the higher low or high. So a bit of a mixed bag there, but yeah, I think we're closer to a bounce than not, at least on the shorter term time frames. And this, for summertime, we could snag it around in this channel for quite a while till the next big move up, which again, we've been kind of eyeing this level at about 120,000. So if we do get a strong, breakout, higher low, a split up to 118 is not out of the cards. And remember, when we get back above 112, we will be in a blue sky breakout. As long as volume is coming into the market, that'll be our indicator that things are starting to go in our favor. What else did I want to look at? The funding rates. Funding rates are you know what? This is not my favorite chart for funding rates. Needless to say, it is not my favorite chart, but funding rates right now on Bitcoin, where does it get worrisome? At 0.1%. So people are not leveraged. Actually, I looked at the leverage on the board, and it is just not the funding rate heat map, right? There's no bright orange. So this is, absolutely a period when it's time to think about getting your longs out, sniping some longs for the next higher low in the making. And that is my signal to go, guys. I will leave you off with that. And our 2-day volatility is still on the floor. Momentum is crossing to the downside. So very, very important. Keep our eye upon this. When this gets above 20%, that is going to be the direction of the next major move, in my opinion. Again, not financial advice. I hope you enjoyed the video. Have yourself a blessed and highly favored day, and I will see you in the next one. Take care.